slowly looking at one by one. So from today, sawa sa tugenda kubanga tusoma sawa sa ez'okumakya tugenda zisomamu. People are always busy. You can easily see that. All right. You can see that right now we are just 14 here out of the 700 people. Now what you are going to do, we are leaving out the 730 lessons, 630 lessons, they are no longer there. We are leaving the morning lesson like this one. Tomorrow we shall not have it. We are having one major lesson at 9 in the evening. One major lesson at 9 in the evening, and that lesson will last from 9 to 11. Come prepared for the session. Make sure you have your book. Make sure you have your book. Somebody was asking me yesterday, Professor, do you always take notes in crypto? Yes, I'm a learner. And every day I keep on taking notes. Okay? So whenever you come to class, make sure you take notes. Simple. We are going to look at chart patterns. We are going to look at chart patterns. You're going to look at chart patterns. And the chart patterns we are going to look at, they are categorized in 3 ways. They are categorized in 3 ways. Number one, we have continuation patterns. Continuation. Okay. And I've told you, I've referred you to this book here. I've referred you to this book here. I've referred you to this book here. And you will see that we have, when you look at patterns, we shall have continuation patterns. We shall look at in number one. The patterns will be continuation. Number one will be continuation patterns. We shall look at continuation patterns. That's number one. Then number two, we shall look at reversal patterns. We shall look at reversal patterns. Then number three, we shall look at bilateral patterns. When you understand these patterns, you will always get high probability winning trades, and these trades you will get will be for long term. I've built a McKinsey account with I put $20 on McKinsey, and I used this. Now this $20 on McKinsey is $50. Okay, so when you understand this, you will understand it for all. Once you understand this, you will understand it for all. Okay, once you get to know this, you know it for all. Good girl. Now, sorry, I have kids here, but I hope you bear with it. I'm sorry for that. Now, those people that have just attended the lesson, that have just come into the Zoom, we are deciding to cancel this lesson at 9, and we shall have only one major lesson at 9 in the evening. From 9, we shall have only one lesson from 9 to 11. During that time, you can consult whenever you like. You can keep on consulting, okay? Whenever you like, you can keep on consulting during the day. But learning will be specifically from 9 to 11. We are reducing abundance of these lessons and make them more useful. So we shall have only one major lesson. Only one major lesson. Okay, we shall have only one major lesson. Now, let's go ahead. And we said that we are looking at chart patterns in trading. These chart patterns are formed by human behavior, by the traders' behavior in the market. And these patterns, they are divided into 3. We have the continuation. They are divided into 3. And I urge you to come here and read about this, okay? Read about this, go to Play Store, get this book, which is called Trading. Get this book from there, where is the book? Let me show you the book. Let me show you. This is the book I'm talking about, okay? This is the book I'm talking about. Please come to the book and read. Come to the book and read. This is the book. It's called Learn Trading, okay? And it is like that in green color. There are very many books, but go through and look for specifically this one. This one specifically. And when you go there, make sure you spend most of the time into the patterns. It has very good chart patterns, okay? So in the first place, we have the continuation chart patterns. Now, these ones, they indicate an ongoing trend. They will tell you whether the trend is continuing, okay? A continuation, okay? You have not started with that trend, but you see that the trend is continuing. So there are some patterns you are going to see that when you look at them, they show you that they are continuation patterns, okay? And in the second place, we have the reversal price patterns. They signal that the trend may be about to change direction. So the reversal will always tell you that, this according to what I've seen here, the market is going downwards, okay? Or according to what I've seen here, no, the market, it is continuing the upward side. Now, according to what I see, no, the market is going to reverse. Instead of it has been going downwards, right now, it is going upwards, like the one I'm going to show you right now, okay? So, patterns zino zigenda kuyambako gwe nga trader okutegeera according to what I see. Most of the time patterns zino zigenda kuforminga when they will clearly be seen when the market is in consolidation, okay? Market bwegwa nnyo wansi waliwo ekiseera bwetukanga eri mu consolidation. Buli webeera mu consolidation ogenda kubeera ng'ojja mu market ng'onoonya patterns zino. For example, Kati, I'm showing you how you are going to apply this. Very sorry, a minute, just. Okay, very sorry for that. Now, let me show you. Patterns zino zogenda zikozesa otya. Patterns zino omalo ziyiga, ogenda kutegeera, ogambe, whenever I see a head and shoulder, number one, you are going to understand how the head and shoulder looks like. How the head and shoulder looks like. How does it look like? Okay. And when I see the head and shoulder, what do I expect? What do I expect? What do I expect? Okay. If I see the head and shoulder, what do I expect? Okay. Or if I see a cup and handle, okay. When I say a cup and handle, what do I expect? What does it mean? So these are the things we are going to look at now. I want you to take some notes. Now, in the first place, write the word best chart patterns in trading. Then after writing this word here, after writing the word, this one here, I want you to say, hope you are taking some notes, that I want you to say that the chart patterns are divided into three. They are divided into three. After saying that they are divided into three, I want you to write this: continuation pattern, reversal patterns, and bilateral. So the continuation patterns, they indicate the continuation. The continuation may be to the upward side. At the same time, the continuation can be to the downward side. Okay. Reversal patterns can indicate that market is reversing from going down to going up, or market is reversing from going up to going down. Okay, change in market trend, that is reversal. Then when we talk about the bilateral, they can move the price either way, meaning the market is highly volatile. Okay, so when you look at bilateral patterns, the bilateral patterns can push the market up. At the same time, they can push the market down. Take some notes and we continue. We are going to look at just one pattern. And this pattern is appearing in several of the coins. And I'm going to show you the reason why I shared some of the coins for you to follow. Okay? I shared some coins for you to follow in the group. And some of you, I gave them in your inbox. I gave them in your inbox. So I gave them in your inbox. I gave them in your inbox. I gave them in your inbox. So take some notes there about the continuation chart patterns. the reversal price chart patterns, and the bilateral chart patterns. And within this, after here, we're gonna see one of the patterns, they called the head and shoulder. Okay. So we are looking at these price patterns, chart price patterns, and for us to understand, you can write them all. The 7 patterns every trader needs to know: the head and shoulder, the double bottom and the double top, the rounding bottom, the cup and handle, the wedges, the pennant and flags, ascending triangle and descending triangle, and the symmetrical triangle. All these patterns, besides using candlesticks, you need to understand the use of these patterns. Okay. Hope that one is home and you've written them down all. Let me know where you are. Somebody to tell me where you have reached right now, because I want you to take some notes here. Or we can continue. You will take notes. Please download this book and write these notes down. Elements of price pattern. Okay. Elements of price pattern. In this way, we are looking at the elements of price pattern. Okay. These are price patterns. And what are their elements? What should be included? Or what should you think of when you look at the head and shoulder, when you look at the double bottom, when you look at the double top, when you look at the cup and handle, when you look at the wedge? What should you put in mind? Number one, you will always look at the trend and the bias. When you look at the trend and bias, the trend means where is the market going, okay? And the bias is a sentiment from the market. What do buyers and sellers think? Okay, bias, directional bias. We look at the pattern description. Then look at the price action characteristics. Okay, look at the logic behind that, the time, the supply and demand in relation to volume, the entry, the stop loss, and the target. So if you understand, for example, let me give you an example. If I understand that this is the head and shoulder, this is the head and shoulder pattern. If it is a head and shoulder pattern, in this head and shoulder pattern, number one, I will identify that when I find the head and shoulder pattern, where is the market going? Because I've seen the head and shoulder pattern. Where is the market going? That's number one. The directional bias. The directional bias. I'm going to understand where is the market going. Okay. So if I see the head and shoulder, I will see that this is a pattern that indicates market reverse of the downward side. Whenever I look into my chart and I find this pattern, the head and shoulder, to me, who has already known how to use the head and shoulder, I will know that now Solana is going to the downward side. Whenever I find the head and shoulder, I know that there is market reversal to the downward side. Market is going downwards. So if the market is going downwards, that is the trend going downwards. The buyers price is selling, or price going down. So I should be able to describe the pattern. How is the pattern formed? Okay, pattern description. You should be knowing the pattern description. Then you should be knowing the price action characteristics. When we look at the price action characteristics, we mean that, for example, when I'm trading the double bottom like this, price action characteristics, I know that if it is a double bottom, price has to come back to my demand zone. Okay, price comes, taps into the demand zone, goes back here, comes back into the demand zone, and when I see this price is tapping again into the demand zone, I can look for confirmation here and take the trade. Okay, that's what we are talking about, the price action characteristics. Because the way price behaves in a double bottom, it is not the same way price will behave in the cup and handle. It is not the same way price will behave in the head and shoulder. It is not the same way price will behave in the pennant flags. It is not the same way price will will behave in the ascending triangle and descending triangle. You understand? So price will always behave in a different way. Price always behaves in a what? In a different way. And since price behaves in a different way, that's why you need to understand the price action characteristics. Okay, you should be knowing that when I see the cup and the handle, this one should be my entry. Okay, for example, when I see the head and shoulder, my entry should be at this point, and this is here is my exit. That's what we call the logic. The logic behind the pattern. That's the logic. Then 5, you should know with the time. You should know the time. Okay, the way how price moves in the one day, it is not the same way price behaves in 4 hours. Okay, it is not the same way price will behave in 1 hour. So you may find that you may see a double bottom in 1 hour, but this one double bottom in 1 hour in one day is not respected. So you should be knowing that when I'm to enter this trade, my exit will be here. As simple as that. Then you should be also knowing the supply and demand. Okay, the supply and demand in relation to volume. You should be knowing the supply and demand in relation to volume. Okay, then you should always define your entry. You should always define your entry. Then you should always define your stop loss as well as the target. Okay, now when you look at this simple thing, elements of price action or price pattern, elements of price pattern, and when you remember very well, if you can remember very well when you looked at the trading journal, when you looked at the trading plan, most of the elements are part of this. Okay, because we said when you look at your trading plan, you should be having the reason. You should be having the reason why you have entered the trade. Okay, you should be having the reason why you have entered the trade, and your reason may be a double bottom. Your reason may be a double bottom. It may be a double top. Your reason can be it can be a head and shoulder. Your reason can be an inverted head and shoulder. Your reason can be a pennant. Your reason can be a wedge. Okay, you should be having the reason why you are entering the trade. Okay, and whenever you see that reason, you should be knowing that whether the market is going up or down. All right, if you know where the price is going up or down, then you should be knowing what the pattern description. That for me, I'm going to do what? I'm going to trade the head and shoulder, and I will enter at the reset of the neckline. Okay, you should be knowing the neckline. You should be knowing the retest. You should be knowing that now price is retesting. Okay, let me show you something. Like here. How many people are here? Only 14. Okay, we are going to only have one lesson in a message here. All right, now let me show you something. When you get such concepts, when you know. Okay, for example, let's come to Immutable X. I love this coin, and I've been trading it for and I've been trading this coin for quite some good time. Now, this is what I'm talking about. This is what I'm talking about. As other people, when you always look at your market in a bigger time frame, as other people keep on panicking and going out of the market, others keep on selling at a loss, for you will be at the safe side. You understand? For you will be at the what? You will be at the safe side. For example, when you look at this coin, and let me try to take it to 1 month. When you look at this coin and you look at it in the 1 month time frame, look at it in the 1 month time frame. When you look at the 1 month time frame, Immutable X in 1 month time frame. Okay, when you look at Immutable X in 1 month time frame, it shows you clearly that this one here is the demand zone. Okay, it shows you here that price comes taps into the demand zone, bounces back, forms, comes back again, forms a double bottom. Okay, price forms a double bottom. In the next lesson, we are going to see how we are using this. Okay, how is the double bottom and how does it look like? You understand? So for you, this we mubeera mu lesson zino n'ozitegeera bulungi kino double bottom ebeera bweti. Price taps into the demand zone twice. Bw'onajja n'olaba nga immutable X ekkirira wano wansi, you will see that no. As other people are panicking to sell, for you will know that no, this is the demand. Price came to the demand zone, we tested, come back here, it made a double bottom. Now price is coming back into the same demand zone, and from here, price will come back here. That one will be into your mind. You, the trader, who always puts in time to understand all this. But that person who doesn't understand this will just go and sell at a loss. Okay, because you bought immutable X around here and it is not selling. For you don't know that now the coin is at the demand zone. It has not yet come back from the demand zone coming to the upward side. You find yourself selling here. After selling here, the coin pumps and come back here and sweeps the same area here, respects the supply zone, then it comes back here. If you understand price charts and how price moves within these charts, you will get high quality trades of long term. High quality trades of long term trades. Some person, I gave a secret to a person to this coin. And where did I get it? Now, when you look at this, when you look at immutable X, where it is right now, this is a 1 month time frame. It is still at the demand zone. It means there are very many chances of this coin to spark up to the upward side. And I can decide to trade this coin till the bull run is complete. Okay, till the bull run is complete. I take profit here. Then after I go, it retraces. I come here again. I take profit around here. It retraces. I come back again. I take profit up this point here. It retraces. I come back again. I take profit from here to here. There I can even go out of the market and say that is enough. You understand? And for if you are good at holding, you just come and find your entry. Enter here, go out of here. 363%. All come here and come slowly. Come slowly. Go out of there, and it will be a 200%. So this is how we track our trades of high quality. Then somebody tells you, when did you enter that trade? You are used to taking 3% from the market. You are used to taking 3% from the market. And you still ask someone, when did you enter the trade? Even if you ask, you will not get the answer. You understand? So from here, my coin is still at the demand zone. I extend in 1 week time frame and see what is really happening in the 1 week time frame. Okay, I see what is really happening. So I come to the 1 week time frame. When you come to the weekly time frame, you can see that this is my weekly high, okay, and down here is my weekly low. So you can also come here and name your weekly low, and name your weekly low, and this is the weekly low here. You can see my weekly low. My weekly low is there. So when you look at this, how price is moving, price came from up there, respected my areas of the demand and supply zones. Price comes back to the downward side. Ogiraba ekomyewo wansi. Kati wano bwebe ekomyewo wansi, wano ogenda kuba tobitegeera wano. During this area, ogenda kuba tobitegeera. Kaki ekigenda okutegeeza ebyo? Ekigenda okutegeeza ebyo, bwebe ekomyewo wano, ogenda kuba tobitegeera. Ekigenda okubikutegeeza, zino patterns ze tugenda okusoma. For example, wano oyinza okulaba nno token yajja nekola inverted head and shoulder. Okay, Kati, today let's look at let's look at this pattern, the inverted head and shoulder. Now, the first pattern to look at is the head and shoulder. Let's look at the head and shoulder first, such that we come to the inverted head and shoulder. So I urge you to come here and read about this. Okay, read about what? And read about this. I urge you to come here and read about this. I urge you to come here and read about this. So whenever I finish something, you come here, you tap on next. Okay? Okay, whenever you finish here, you come here and you tap on next. Okay, so when you come here, the head and the shoulder. Now, if you want the head and shoulder pattern, the head and shoulder pattern looks like this. Price comes from up here. Price comes like here. That's this. Okay, and it creates a neckline like this. Okay, so you find that this is our head. That's our head. That's the right shoulder. This is the left shoulder, and this one will always be our neckline. This one will always be our neckline. Most of the time, you will find before identifying your entry, you will first identify this pattern. Okay, you will first identify this pattern. After identifying this pattern, whenever you find the head and the shoulder, just know that this is a market reversal signal, the downward side. Market reversal, the downward side. Okay, market reversal, the downward side. Price is going downwards. Price is going downwards. Price is going downwards. Whenever you find the head and the shoulder, just know that price is going downwards. And after this forms, this will be our neckline. So you will always wait for price to cross this area. Okay, price will cross this area, goes down here, and after it will come back and retest it. At the retest, this is our clear what? At the retest, will be our clear entry, and we will expect the price to come back down here. This coin made it. This coin made that pattern. When was it? So I saw immutable X. Let me add immutable X on another exchange. Let me add that on another exchange. IMX USDT. This is from Binance. Let me add this one from Coinbase. Okay, let me use that one from Coinbase. Because the one on Binance, I've already made the analysis on it, and I need my analysis there. Now, look at this coin. Sorry. When you look at this coin, it formed the head and the shoulder. And if you look at here, this is the pattern we are talking about. Price came from here down, made a shoulder, comes up, comes back here, comes here, comes back here. Okay? And whenever I see this pattern here, I just know that market is going downwards. The market is going downwards. And when I see that market is going downwards, I'm going to get a signal. I'm going to get a signal, a futures signal, while the market is going down. Now, I'm going to look at the strategy later. We have a 1% strategy. A 1% strategy, number one, you will never be liquidated in the market. If you come and use the what? If you come and use the what? The 1% strategy I'm going to show you. Now, let me show you how you would have traded this. Now, you come here, scroll down, and get your head and shoulder pattern. Head and shoulder pattern. Now, this is your head and shoulder. And if this is your head and shoulder, you will see that you come here, tap that area, bring back, make the shoulder, come back, tap into the head, come back here, tap into around this area. Then from here, make the right shoulder. Then from there, bring back price where it is down here. Bring price there. Okay. Now, whenever you formulate the head and the shoulder pattern, the head and the shoulder pattern most of the time indicates a down trend. It indicates a downward. It indicates a down trend. Okay. It indicates a down trend. It indicates a what? A down trend. And whenever you see it like this, it always has a neckline. Only that I've drawn this within a bigger time frame of 1 week. Okay, we shall see it in the small time frame. For example, this is the red. This is the red. The left shoulder. This is the right shoulder, and this one is our head. Now, what you see? This line you see here. This line you see here. This one here. Sorry. This line you see here. This line. Let me take away this. This line, the dotted line you see here. That dotted line is always the neckline. The dotted line there is called the neckline. Now, when do you enter the market? After seeing that the head and shoulder. The head, and whenever you see the head and the shoulder, number one that should come into your mind, whenever you find any pattern, even if it is not a head and shoulder, we shall always reflect on this that we have talked about earlier. We shall always talk about this that we have discussed earlier. Sorry. Yes, this app always has ads, but it is okay because it is free of charge. It is free of charge. So it always indicates ads. Okay, but it is okay. You just leave it. You just leave the what? You just leave the what? You just leave it like this, and you go what and look at what you needed to know. Okay, now, like we have found our head and shoulder. Then after finding your head and shoulder, number one, you will ask yourself the trend. As I have seen the head and shoulder in my work, in the analysis that I've made, what trend does it indicate? So you find it indicates a downward trend. Sorry. Okay, it indicates, see, what is that indicator, coach? It is not an indicator. The Rob Bruno indicators, we are now tackling trading. That is not trading is not an indicator. Trading, you can trade pure price action. And by the time we finish these lessons, if you pay close attention, you will know what we call price action. You will know that trading does not mean an indicator. An indicator shows you something that was already happened. You understand? An indicator will always show you something that has already happened. The indicator shows you the past data. The indicator always shows the past data. What shows the current data is the price action that we are looking at now. And price action begins from the candles we studied earlier. The candles, this is the bullish candlestick, this is the bearish candlestick. And we said candlesticks, they have patterns. Bullish engulfing, bearish engulfing, the doji, the morning star. We said it forms patterns. The morning star, the evening star. You understand? The bullish inside bar, the bearish inside bar, all that sort. Then after identifying all that sort, we went ahead and we are saying that when these patterns, however much they have patterns, the bullish engulfing bar, the bullish inside bar, the bearish inside bar, the bearish engulfing bar, the doji, the what, whenever they combine, they form patterns. And these are the patterns that we are looking at. That me looking at a pattern can tell you that now the market is going down for a full month. Now the market is going down for a full day. You understand? This is what we are talking at. This is what we are looking at. You don't need any indicator. You don't need any indicator. This is pure price action. I always pay for these lessons. I make people to pay for these lessons. I'm doing it for you for free. Why? We're gonna face a bull run, and I just want you to get your 3 coins or 5. Get your 5 coins. For example, you can get Immutable X, you can get Link, you can get Ethereum. Just get your 3 to 5 projects and you look at them and how they are behaving. How are you going to look at them using the price action we are looking at right now? You understand? So, had you seen this head and shoulder pattern and you know that price will come back, you will see that this is the what? This is the left shoulder, this is the right shoulder, this is the head. Now, when do you enter the market? You wait for price to come back. You wait for price to come back and retest this shoulder area. It retests the right shoulder. You can see that price tried to come back and retest the right shoulder. Now, if you are trading, for example, you drew your trend line like this, and you made your entry around here, don't go higher, a bigger percentage of profit, because you have already seen the head and the shoulder indicating a downward trend. So by this one coming back here, it is coming back to retest the shoulder area. It is just coming back to retest the neckline or to retest the shoulder here. Most of the time it retests the neckline, but retesting the neckline can easily be seen in small time frames. In small time frames, that's when you will see price forming a head and shoulder, coming back here and retest this line, this dotted line here, which you call the neckline. Okay, so the characteristics of the head and shoulder: number one, it should come here. It will stop at a lower level, come back here and retraces a bit. When it retraces a bit, it will not take out this low. It doesn't take out this low, but it comes back and breaks this previous high and makes a head. Having made a head, it comes back here within the same area of the left shoulder. It makes another shoulder, which is the right shoulder, and within here there will be a neckline. Now we always look at the neckline, and when the price comes back here, most of the time it will come and retest the neckline. At the retest of the neckline, this is where will be your entry. And why are you entering the market? You are entering this market to short it. You are entering this market to do what? To short it. For example, I saw price coming back and I took a trade here on immutable X here. And when I take a trade on immutable X while shorting it, I will target its demand zone or its previous low. Okay? I will target its previous low. And the previous low is about here. Okay? You can see that immutable X went down a 69%. Now you can tell me, proceed. Within this area of the 69%, immutable X will liquidate me. Please come to the market with your $100. You have seen that the overall trend is a downward trend, all right? But you have only your $100, all right? Come to your royal queue, make the first buying amount 10, the second buying amount 20, the third buying amount 40, the sixth, then the next year. Use the double up strategy, and yet your percentage drop be 30%. Let your percentage drop be 30%. Let your margin calls range from 10, 20, 20, 30, 40, or you can even say, you say, no, let my first amount be 7, and the second be 14, the next will be 28, the next will be 56, the next will be 105. You understand? So you can even stop here. This is my strategy. I'm going to short immutable X from this area to the demand zone. All right? These are my... Now, the problem with you is your leverage. The problem with you is your leverage. Your leverage on such a high quality trade should be a 1x. You will never be liquidated. 1x%. It means if you are entered immutable X here with $100, with a leverage of 1x, you understand? By the time it comes to make 69%, at least you have a 30% profit. With a 1x leverage, 1x, I say it again, the leverage should be 1x. The leverage should be 1x. The leverage should be 1x. I come again. The leverage must be a 1x. And this one we call it the 1x strategy. 1x strategy. We have been analyzing and trying. I've been trying this on my Mekiza account. And I started Mekiza account with the $10. Okay? I started my Mekiza account with the $10. They are $10. And now today it is having $49. Am I in profit or loss? I'm using 1x. You understand? 1x. And I've done it for a long time. It has been a long time. So I've been testing it. Why $10? That is what I could afford to lose. Only $10. But when it comes to MACD, when it comes to futures, especially when trading, the market is going downwards, don't put 3x. No, don't put. Did you see Sunni USDT? I traded Sunni USDT. And let me show you how it played out. Sunni USDT. Sunni USDT. And this was what? No, it is okay. Let me take the same coin. Sunni USDT. This is Sunni USDT. And Sunni USDT foil, it fell from up here. Sunni USDT, take it to 4 hours. So take it to 4 hours. Let me show you how it performed. This is Sunni USDT. And Sunni USDT, this is how it performed. Sunni USDT, this is how it performed. Now, when you use leverage, when you come here, I entered this coin around this point here. Okay? Around this point here. It came all the way to here. Okay? It made like, was it? I took just like 15% on it. Yeah, it was like 15%. Now, when you are, is it a same coin? No. Is it Sunni USDT? Sunni USDT. This is the coin. You can see how much it moved up. Okay? Now, with such coins, use a 1x. 1x. Leverage 1x. Get it earlier. Enter earlier. When you enter earlier, it can even move to negative 63, but it is okay. It can even move negative 50. It is okay. Even if it got to negative 80, with your 1x, you will sleep and come back. Oja kwebaka bulungi ozuuka otuloto nga tewali kwekanga, because you know the leverage is only 1x. But could it move 63% with a leverage of 2? You already liquidated. Don't use leverage. Just take the advantage of the market. Let me show you how I profited on this coin. You know, this is a strategy I've been trying all the time. I entered around this area here, and I went out here. A perfect 27%. Had I used $100, 100 times 27%, 100 times, those are $27. $27. Do you realize that the market dips more than it goes down? The market coins move more down than up. The coins move more down than up. And by so doing, you will find out that you as a trader who wants to trade as the market is moving down, please, you trade spot in futures. Trade spot in futures. Trade spot in futures. Take 1x. Simple. From the beginning to the end, 27%. You understand? Don't put any leverage. For example, you come here. Let me go to, you come to your royalty here. The reason I want royalty so much, it always tells you that now this coin, this is the better performing one. Okay? You tap on this, tap on here, and tap here. You see that cyber is killing it. This is cyber. Okay? This is cyber. It is down. It is already down. Now, had you traded cyber? Let me come back. This is how cyber is coming. And when you look at cyber, there is no news to support this cyber you see here. Cyber has to come back here down at around $2.0. You understand? 1 week time frame, you can see. You can see. Now, when you look at such coins, don't struggle with them. Leave them to pump. Leave them to what? Leave them to pump. Let me look at SKL. Leave them to pump. This is SKL. Those are 15 minutes. 15 minutes, the market is still up here. Okay? So look at this coin. Are you seeing it? It is 1 hour. It has a 32%. It has a 32%. Look at it. 32%. Look at it in 1 day. I can trade this coin with the 1x. Come here. I just draw up the time frame. Come to your trading view, for example, here. I wanted to give you that strategy. For example, this coin is SKL. SKL. SKL USDT. This is the coin. Okay. Come on this coin. Come on this coin. This is the coin. And it is saying 17%. You can see how far it has moved. Okay. Within what? This is how much it has moved. It has crossed the what? It has crossed this area. It has crossed this area. It has broken the structure. And it continued upwards. It broke the structure and it continued upwards. I dare you, this coin is coming back. Okay. So when you come back, use the knowledge that we saw earlier. Label your demand zone. Find your weekly high and the weekly low. Find your daily demand zone, daily supply zone. Then after all that, you can see this coin. Again, that could come to the 1 hour and see what is happening on it. Okay, you can see what is happening on it. This is 1 hour. Take it to 15 minutes and see what is happening on it. You can see it still has some power. This is volatility. This is just volatility. But this coin is coming down. And for me, what I do, I wait for this coin. I wait for it. For example, I can even say, this coin has been moving like this. Just crossed this area. Okay. So I say, let it come and bypass this, and it starts going downwards. Let it come and bypass this level, coming downwards. Or even I can make analysis on this coin, and I say, where is my demand zone on this coin? Where is the demand zone? So when I look at skill in 1 week, 1 week time frame, this is the biggest time frame. Now, this is the coin. This is the coin. Let's analyze the coin. Let's analyze the coin. Okay. Yeah. This is the coin. That is the weekly low, and this one is the weekly high. Okay. Double tap on the lines and label them. Weekly high. This is the weekly high. Okay. Bullish, bold, italic. You say okay. Come to the down line. Double tap on it. You say weekly low. This is the weekly low. Bold, italic. Okay. Weekly high, weekly low. All right. There we are. There we are. There we are. This is the coin. This is the coin. Extend in 1 day time frame. Extend in 1 day time frame. Extend in 1 day time frame. See what is happening on that coin. Okay? Extend on 1 day time frame and see what is happening on the coin. This is what is happening on the coin. Coin went down, went down, went down, went down. And it's still going down. You understand? This is the coin. So I can even come to the 4 hours time frame. Put the chart clear. Simple. We are looking at how the chart is performing. Okay? Look at the chart. This is the chart. Now here I have my area of interest. So my area of interest is this. This is my area of interest. And if this is my area of interest, number one, I will find, or I can even take it to 1 day and I see where is my area of interest. My area of interest is this. So I say, where is the demand zone? I bring my rectangle. I do the demand zone. I taught you how to do the demand zone. Do the demand zone here. This is the demand zone. This is my demand zone. And this is how it looks like. This is the demand zone. Okay, let's save all that. This is the demand zone. I will see my demand zone in 1 day. Then I come to the one. I come to the what? This is my area of focus. I'm focusing within this area. Okay. Why am I focusing the area? Price come here. taps into the demand zone, respects the area, comes and tests the demand zone, respects the area again, comes back to the demand zone, respects the area again, comes back into the demand zone, respecting the area again. I expect it to make a retracement near the demand zone. So here I'll find my supply zone. I drag this. I find the two consecutive candles. This is what small, this is big. I take the small, I enclose it, it becomes my supply zone. Take my rectangle here, enclose this. Enclose this. I can even take the 3 candles. I draw a rectangle on them. After drawing a rectangle on them like this, I extend it here like that. All right. So since I know that the supply zone means sellers, I double tap on it. The supply zone means what? Means sellers. I tap on it. I tap on this thing here and I name it red. It becomes red. I double tap on it and I say supply zone. Simple. This is my supply zone. Okay. I say okay. I come here on the downward side. I tap on this one. Here, I double tap on it. I say demand zone. Demand zone. Okay. Demand zone. I say okay. Are you seeing my demand zone and the supply zone? Now, SKL USDT is nearing the supply zone. And since it is nearing the supply zone, there are two possible ways. If price breaks through the supply zone, it may continue coming to the upward side. If price it goes back, it may come back and retest the demand zone. All right. Now, I want to trade it. Let me go now. Here, I can even look at it. Now, this is the next lesson we are going to look at. We are going to look at patterns. Now, if I look at this, I don't see any pattern in the 4 hours. So let me go to 4 hours and I see. So when it comes to the 4 hours, price is respecting the demand and supply in one day. Price is respecting the demand and supply in one day. And when I look at it, price has surpassed this area. Okay, it is coming back to the area. So I can near to the 1 hour time frame. Not the 1 hour time frame. When you come to 1 hour time frame, 1 hour time frame, this is how price is moving. Price is respecting the supply and demand zones in the 1 hour time frame. In the 1 hour time frame, price is coming back to what? The supply zone. And price is weakening within the supply zone. Price is weakening. The candles are not strong to break the area. These candles here, they are not strong enough to break the area. Okay? They are showing areas of weakness. The coin is showing weakness around here. It is showing weakness. Number one, you can see that it came with strong momentum candles. Then from here, it has started making candles within the supply zone. This one may be an indicator that now the buyers are losing control. The buyers are losing control and the sellers want to take over. The sellers want to do what? The sellers want to take over. I can come nearer into the 15 minutes time frame and see what is really happening. When I say in the 15 minutes time frame, there is a lot of price volatility here. Price is still volatile. I want price to make a confirmation that it is going downwards. Okay. Now, at this point here, I cannot short it or I cannot long it. I will wait for it to go out of the zone. Going out of the zone. This is the zone. This is my area of interest. And I wait. If I'm to long the market, if I'm to go long on this coin, I will wait for price to break this area. We'll make a continuation and test this, then it goes back down. If I'm going to trade this coin, I expect it to go out. Since here you have said, I want it to go out. I come in, I see it retesting the area again. I make my entry and then I sell. You understand? So here I have not decided whether the market is going up or down. As simple as that. Let's have any questions to answer. The Twitter price action. Twitter price action. Pure price action on chart. Without any indicator. I don't need any indicator to trade. You need your candles, your price chart, your chart patterns, and you are ready to go. People on the call are 17. We are canceling the lesson. This one at 9. We are going to have one major lesson at 9 to 11 in the evening. We are having only one lesson in the evening. Only one lesson in the evening. There is a lot to do. And make sure you come with a book and pen. Take some notes. Then the problem with you don't practice. You don't practice. You people, take 15 minutes on the chart. Draw your supply and demand. Share it in the group. Share it in the group. If you see process, share the supply and the demand zone in the group. You come and draw yours also. Go and draw yours. You can draw your supply and demand on 1 hour. Share it in the group. People will tell you that, here you have made a mistake. The supply should be like this. Here you have made. Now it means there you will be learning. But if you sit down, you wait for the signal, my dear, if the signal group collapses, you will not make money. You understand? You will not make money. So you go and make a practice from what we have learned. You can draw your supply and demand zone. Share it in the group. You go and find your 10 coins. Write your 5 coins in the group. But these are the 5 coins I'm going to follow. These are my 5 coins I'm going to follow. Oh, these are my 3 coins I'm going to follow. Why am I following them? I'm following them because they make a very good pattern in 1 hour. Okay? For example, these are my coins that I'm going to follow. I'm going to also share this. Let me show you one of the coins I'm going to follow. Link. Link. This is Link. Link has sold. I have not made money on it. Link. Why? I had to show to you. Why didn't you make an alarm at the retest here? Link, you would have made an alarm and tell me that I'm going down. Please short. Please short. And when you are shorting, Link goes slow because it is on an upward trend. You can catch your leg and take you there. You understand? So as my take a profit on Link is on $27. I have a take a profit on $27. So whatever you see Link is doing, it is just a retracement. And if you are trading it in the reverse way, you go slow because this coin is an upward trend. Okay. So you can see that this is my analysis. Now let me share my analysis in what I've already shared this coin. So you can see that this coin, this is the coin I've been trading. So it came here, pushed up to this level of around 27, comes back here within a downtrend, makes a double bottom at the demand zone. This is the demand zone, and this is my swing low. It made a double bottom. This and this, these are double bottoms. So look at this pattern here. The pattern here, sorry, this is the pattern. This pattern here is a what? Is a double bottom. So price made a double bottom. After making a double bottom, it made a swing and it broke it. After breaking it, it comes back and retests it. It comes back here, retests it, but fails to break through. Comes back and comes near here, then breaks through it. After breaking through it, we are no longer coming back here. So my target is 25.95%. That is my percentage profit. So this is how we stack high quality trades. So you stack, this is a trade of high quality. Is there anybody that made money on Link? Link is bullying. And whatever you see here, it is doing, it is just a retracement. Okay? It is pushing up to the 27 level. However, trade with the question. Trade with what? Trade with the question. You got the 4 hours. You got the 4 hours. It has made a retracement. It is making a retracement, but my major take profit is here at the 27.9 line. 27.9. I'll exit Link and I will let it go. I will let it go. This is the coin. So whenever you see this search, whenever you see this, whenever you do this in your chart, for example, this one, you do it on your chart like this. Make sure you bring it in the watch chart like this. Then, like after you do this all, tap on the what? You can share. Please share to us and tell us that this is it. You can even do this. You can even do this. that I did on what? On XLM. So XLM, I went out of here. I missed this entry on XLM. I missed it. It made a double bottom very well, but I forgot to go with it up to this area. I stopped around here. Very bad. I stopped at the neckline. I stopped at that thing. So whenever you make analysis, please come and show us your analysis. Come and show us your analysis. Unless you have any unless you have any query, allow me to stop here. 1 mega lesson from Monday to Friday will be a big deal. Exactly. 1 mega lesson, 1 from 9 to 11. 1 mega lesson from 9 to 11, starting from today. So no more other lessons in this group. We shall be having 1 special lesson. That's when people will have, people will be serious with it. 1 only. Unless you have any question. If you don't have any question, allow me to stop here. We have a live. Come to our live. I'm going to start it now up to Sam Nana. Come and attend the live.